The inflation rate in May reached a 40-year high of 8.6%. News reports are full of negative news. Interest rates, recession, housing bubble, stock market entering bear territory, food shortages, war in Ukraine. Did I forget anything? Many potential home buyers are asking if they should wait for the prices to settle down. A short answer is, it depends. You would ask, it depends on what? It depends on how long you are planning to stay in that home. This is Michael Tallis with the Tallis team. Click the like button and subscribe to this channel to receive regular updates on the Bay Area real estate market and specifically here on the peninsula. And don't forget to hit the notification bell. In this video, I will give you 5 reasons why, paraphrasing Will Rogers, you should not wait to buy real estate. You should buy and then wait. My quote of the day. But before we jump in, let me clarify what I mean by it depends on how long you are planning to own your home. It used to be that people in the United States moved every 7 years. After the crash of 2008, the statistics shows that people are staying in the home for 10 to 12 years. In recent history, most homeowners were able to make money if they stayed in the home for at least 7 years. Even if you are buying a home at the peak of the market, long-term ownership will protect you from the market whims. In the whole United States, the average home appreciation rate is 3.8%. In California, the average appreciation is almost twice higher at 6.8%. There are significant appreciation rate fluctuations year over year, and if you are planning to own your home for a short period of time, you are incurring higher risk levels. It is impossible to perfectly time the market and day trade real estate. Bottom line, if you are planning to own your home for an extended period of time, you are safe from the investment point of view. The demand for housing will continue to push home prices up for the foreseeable future. And now, here are my 5 reasons why it is still good time to buy real estate. First, we have to talk about the interest rates. According to Freddie Mac data, mortgage rate jumped from low 3% range at the end of 2021 to low 5s by mid-April of this year. For the last 8 weeks, however, the interest rates remained relatively flat, with the 30-year fixed-rate mortgage fluctuating between 5 and 5.3%. So far, we don't see these high interest rates impacting the velocity of sales. Median time on the market through the spring months stayed in 7 to 8 days range, and the median home sale price stayed in 1.6 to 1.65 million range in Santa Clara and San Mateo counties. To counteract the recent rate hikes, many buyers are choosing to go with adjustable rate mortgages. Adjustable rate mortgages have lower initial interest rates and help you reduce the monthly payments or afford a better home. Most economists predict a recession in the near future. Some predict that it may start as early as second half of 2022. Historically, interest rates decline during the recessions, and you can count on refinancing when mortgage conditions become more favorable, while securing the best possible home for yourself and your family now. Number 2, demand for housing will remain strong. The reason for that is that the new household formation is outpacing the housing supply. Between 2015 and 2020 on average, there were 1.5 million of new households created. During the same time period, the average home completion rate was slightly above 800,000 homes. Overall, since 2000, US has underbuilt single-family housing by 4.3 million units relative to new household formations. This critical shortage of housing affected all regions of the country. Bay Area, and especially the peninsula, are affected more than other areas due to the lack of land available for new construction. Santa Clara and San Mateo counties are landlocked, with Bay on the east side, mountains on the west side, and cities stacked one against another from Golden Gate all the way down to San Jose. Number 3. Real estate is a hedge against inflation. May 22 inflation rate was reported at 8.6%, and it was the highest in 40-something years. The average rate of home appreciation in the Bay Area over the last 10 years was 10.7%, significantly outpacing the inflation, especially during the good years when inflation rate was below 2%. The key to taking advantage of this appreciation engine is long-term home ownership. Indeed, Majority of Americans consider real estate the best long-term investment. According to the latest Gallup poll, 45% of the respondents choose real estate as the best investment, compared to 24% picking stocks, 15% selecting gold, and 9% relying on saving accounts. Historic data proves it. Home prices were growing in 4 out of the last 6 recessions. Number 4. Real estate market fundamentals are strong. In a recent poll by Pulse Economics of a group of 114 economists and housing experts, 60% of polled believe that today's housing prices are not decoupled from market fundamentals. The housing prices can be explained by factors like supply and demand that are backed by most sound lending practices. Currently, over 70% of mortgage dollars are going to consumers with 760-plus credit scores, in contrast to pre-2008 time period, when that number was under 25%. The same Pulse Economics report stated, with home values at record high levels, and vast majority of experts projecting additional price increases this year and beyond, home prices and expectations remain buoyant. And finally, number 5. Bay Area robust tech economy got an unexpected boost from the COVID pandemic. According to the Global Startup Ecosystem report by Startup Genome, over the last 2 years, tech companies were growing at 2.3 times rate of non-technology-based companies. The same report stated that Bay Area is still attracting the highest number of startups compared with other technology incubators. Digitalization of our lives is expecting to continue driving more workers to the area. The demand for housing will remain strong. After all, the housing is one of life necessities, just like food. If you are a buyer, and it is the right time for you to move, I would not hesitate to start shopping for a home. The main question you have to answer is how long you are planning to stay in this home. Yes, it is hard to predict what will happen in 3, 5, or 10 years. But if you don't currently have a plan to move out of the area, find the best home fitting your needs and buy. It will provide you with a stable base for your housing costs and will help you plan better for the future. If you are an investor looking for a project, you should be more careful than ever picking a property to buy. Most economists predict a recession in the near future, and you should factor it in your financial calculations. On the other hand, if you are looking for a rental property for a long-term hold, it is still a good time to buy. The rent prices are expected to continue to grow, and return to working from office should bring more people back to the Bay Area. And finally, if you are a seller, you should not rush to the market to sell your home if it is in conflict with your life plans. The housing market continues to show signs of resilience in the face of unprecedented inflation and a steep interest rate jump. Connect with your local real estate advisor to discuss your local market dynamics and get professional home value estimate in preparation for your future move. This is Michael Tallis with the Tallis team. If you are thinking about buying, selling, or investing in real estate here on San Francisco Peninsula, call or text me at 650-766-6100 or post your questions in the comment section below. I will make sure to respond to all of them. Till next time.